What up, people? It's the weekend, so that means I'm doing a company video. Today I'm gonna look at Builder BLDR, which stands for let me go to the Builders FirstSource Incorporated. And what I'm gonna do is do an overview, and then I'm gonna look at some bars, some charts, some numbers, and a little gem that I found on one of their people. So first, the reason I'm looking this company up is because I heard it on a show. If you don't listen to it, I love the show. It's called Market Huddle. It's like the best. So go check it out. And this guy on there, Mr. Cooperman, mentioned this company, and I decided to take a look at it. And so that's why I'm doing this company review. And what I found I really liked when it comes to numbers, so I want to share that with you. If this thing does a pullback, I'm really heavily considering actually selling puts against it because it has so much free cash flow, it's going to make your head spin. And I like that quite a lot. Its valuation is decent. So if you believe the thesis, if you're on board with the thesis, no pun intended, you'll see why, then I think this would be a really, really great company. Anyway, back to the overview. So this company is basically the Home Depot of home builders. I mean, it produces all of the products that you might need for building homes. Today, unfortunately, it jumped 7%. Well, fortunately if you hold the company, but unfortunately if you plan on getting in. Not today, sorry, on Friday. This is the performance in 5 days, up 8.42%. 1 month, year to date, down 33. So moving about as good as the NASDAQ at the moment. This is what the 1 year chart looks like, and this is the 5 year chart here. So it's had exceptional growth. You'll see in a second. This is the March low here in 2020. Dropped all the way down to like $10, $11. Now it's 57, but you'll see that when we look at the numbers, you'll see that it's justified. First, I'll bring your attention to this little rectangle here, little square, and the blue line is actually the revenue, and then the invisible green line is the earnings, and the earnings are very, very, very low. In 2016, you can see it's not even showing up on the chart. It's 144 million, and the revenue was 6.4 billion, let's say, in 2016. So the revenue had been steadily growing. I think they have like some acquisitions or something like that. I haven't read into it too much, but you'll see that you can actually tell they leave a mark, right? They leave a little watermark, these acquisitions, by sudden boosts in revenue, etc. But in 2021, this company experienced massive growth because of the housing boom. So many people are expecting this to kind of calm down, but I don't know if it will. So right now the company is valued at what's the market cap? The market cap, why am I not seeing? Oh yeah, at the top, 10 billion. And you can see the revenue here was 20 billion, so twice the market cap of the company. And it earned 1.725 in 2021, which is nuts, right? It's like 6 PE. The official price to earnings ratio is 513. Let's go to the statistic to find out the EV to earnings, because the enterprise value is actually 13.5, suggesting about a 3.5 billion negative net cash position, which we can find. There you go, negative 3.57 billion. So I like to look at the EV to earnings to be more conservative here, although they probably do use their debt fairly profitably. So EV to earnings is 616. EV to sales is 0.63. But now the most fun part, we're going to go into the financials and see what's going on. So this is the revenue by year. Fairly huge growth here, especially in the last year. To get a better picture though, I like to go to the quarterly to see if any faults. You can see in 2015 there's probably some kind of acquisitions because there is a huge boost in revenue. So it leaves kind of like a little watermark. I have not dug into the history to see what they actually were doing. But another way you can tell is, I'm just going to skip ahead real quick, is by the shares outstanding here. So whenever there's a bunch of shares issued, sometimes they do deals with shares, and so they would pay for the new purchase by issuing shares. And that could be what has happened here in 2015. You can see, 2015 there was a little bump in shares, and in 2021, so there might be another acquisition here. But either way, acquisition or not, the revenue is going great. In fact, they had the best quarter. Their most recent quarter was the best one. Look at this, 5.68 in revenue just for this last quarter. That's almost their entire valuation. Like, in 3 months, they revenued almost their entire market cap, more than half of their market cap. So in half a year, the revenue, that's crazy. So anyway, operating income, key figure here, it has absolutely skyrocketed in 2021. I guess they must have found some really big synergies. I'm assuming there was a some kind of acquisition or something like that, or a merger, 2021. So they must have really kicked in some excellent synergies to bring their operating income this high. So the other thing that I just looked at, but I like to look at, is the shares outstanding. And what we can see here is a dramatic reduction in the share count in the past, 5 quarters. This is really dramatic here, the last 4 quarters. So they're buying back shares by a bunch. They may or may not be issuing debt to buy these. I don't know what kind of gymnastics they're using in order to buy these, but they're doing great. Look at these numbers: earnings per share growth, 328%. Okay, so let's take a look at some statistics. We already went over the market caps and all that. So one thing that really struck me here is, look at the free cash flow. $1.9 billion. Their capital expenditures are actually really small. So it's a very profitable company. Look at these magical figures here. Return on equity, 41.9%. Return on asset, 19.8%. Return on capital, 41.9%. It's really good. They do, one thing that kind of gives me pause is that they do have 28,000 employees, which in my opinion is quite a bit for a $10 billion company. But, I guess their work is very labor intensive. Their company is very labor intensive, so they need them. I'm just wary whenever companies can't find efficiencies to kind of do what they're doing with this many employees, or at least get a lot more per employee squeezed out. So hope that improves as things go on. You can see profits per employee is only $78,000. Gross margin, operating margin 14%, pre-tax profit margin is 10.24. That's the important number for me anyway to look at, is the profit margin, because it's all the way at the end of the chain. 10.24 is really good. It's anything above 10 is really good in my opinion. So that's really good. As far as the company, it doesn't seem that this company is very widely known. I mean, I'm sure obviously insiders know it, and if you're trading it, you know it. But I was looking through the news items, and as of recent, there weren't actually any articles that I could immediately find that were dealing with this company. And if they were only automatically generated company by Zacks or whatever, some other automated article writing machine. So I don't think people are very actively looking into or reporting on news. The news articles were something like, uh, FirstSource hosts a golf tournament for leukemia, lymphoma, whatever, and raised such and such number. And that's kind of the only type of news items that this company is experiencing. No one's really mentioning its meteoric rise. So if you want to buy this company, obviously you gotta make sure that you're on board with their business and prospects. So you gotta be a housing bull. Right now, the housing market is actually still very strong. Some experts are predicting a downturn. However, the sales are actually still climbing. New home sales are doing really, really well. And so these guys supply the home builders of new sales. So it's kind of like, the mining picks in the gold rush, selling the mining picks in a gold rush. So I'm expecting to make some deals and to keep making money throughout this, the next few years. So if you're a long-term investor, I think this company is probably gonna keep doing well, even if it does correct here in the near term. If you look at the graph, right? If you look at the stock chart, let me see. Let me see if you can see this well. Can I zoom it in? I can. Oh, this is a cool chart. Not bad. Candles, let's do a line. So, it's had a few corrections here. In 2000, this is 2021. I'm sorry, yeah, I don't know why it's, oh, there we go. 2022, new but operating these charts. First time I'm trying it. Let me give you a better look. Okay, so it's February, March, April, May, June, July 2022. So it's got this like 3 elevators down and then steps up. Now, normally when I see this, I'm actually kind of quite bullish because it tells me that it really, really wants to go up. But then there's a correction because of outside interference of some sort. It's not really news items related to the company. It's just something outsourced out there that's forcing people to liquidate at almost any price. So that's actually really bullish for the company if people who are, forced to sell rather than want to sell. The staircases is indicative. Now this is like my opinion, not necessarily general wisdom, but it could be. Is indicative of people trying to get in without shooting the price up too high, right? It's basically forming a little bottom line that's ascending, and then quick downward moves are indicative of people trying to clear at any price. So whenever I see staircases up and elevators down, it's a very bullish type of thing. I'm not a chartist and I'm not a technician, so take everything I say about charts with a really big grain of salt, but I did want to mention that that to me the action is pretty bullish in this bear market that we're in right now. Okay, so we went through all the numbers, went through charts, talked about the company, what you might need. Remember, none of this is financial advice. It's just for entertainment purposes only. I just really enjoy doing these. And by the way, I do weekly updates on an account that I run for fun, like a public account. So Monday through Friday, I'll do updates of that. So if you're interested, you can check those out. And on the weekends, I like to do little company reviews and highlights, just like I did right now. So let me know if you want me to review a company or something that you might be interested in, or that perhaps you own, or that somebody else owns, or that you think it's going to be in the toilet, right? Maybe you're shorting it. Let me know and I'll do a little overview and I'll give it my little spin and what I think about it. So far, builders, definitely a buy. I would want to get in around $50 mark. But even this price is really good for like a long-term hold. But I might sell puts around the $50 mark if it drops that low. So that's my verdict here on this company. All right, let me know what you want me to review next. All right, peace out.